Welcome back. Well, we are going to be focusing on Dwarikesh Sugar. The company reported a weak set of earnings for second quarter. Margins for both sugar and distillery segment contracted. We have Mr. Vijay Banka, the MD of the company, joining us now to discuss the earnings fine print. Mr. Banka, good afternoon. Thanks a lot for joining us. Well, that's the bigger question. There is a margin contraction both in your ethanol and your sugar business. What led to this? Was it largely led by higher cost of inventory? And what kind of raw material pressures did you face?
Very good afternoon. Yes, I must confess that the results have not been all that good. There has been contraction in the profit as well as the margins. The main reasons are, number one, there have been some one-off expenses that we had to account for in this quarter. One is the arrears of wages, which we are required to pay retrospectively from 2018. So that has come into effect in this quarter and this half year. Secondly, our molasses requirement for levy purposes stands increased to 20% from the earlier 18%. So this is again for the seasons 2021-22. So we had to actually, it was a case of lost opportunity to manufacture and sell more ethanol. And thirdly, our distillery got commissioned in the month of July. So, we had some initial teething problems, and therefore the recovery there was a little lesser. And fourth, of course, the sugar that we had produced in the last season, the sugar price, the sugarcane price was up, the recoveries were a little low. So the cost of goods sold was a little higher. So these are the reasons which are responsible for contraction in earnings. But having said that, I must say that these things are now behind us. When we look ahead, there's going to be a whole set of new dynamics because for the first time we're going to be using sugarcane juice for making ethanol directly. So all these factors should see some rebound in our earnings and profitability in times to come.
Sure. Mr. Banka, over the weekend, the cap on sugar exports was extended till next year. How exactly is that going to impact your business?
No, you see, basically, it's not a negative news as is made out to be. Because what the government is trying to say is that the sugar export is going to be regulated. So the regulation will continue till the next year, which means one cannot export the way one wants to. But the government, we expect government to announce the export quota for the season 22-23. So the expectation is that 6 million tons is going to be announced immediately, and maybe 2 or 3 million tons will be announced after a couple of months. So there is a clear understanding that sugar needs to move out of the country, and because we are looking at a bumper sugar season ahead, so it will be allowed. It's not that there is going to be no export at all. There is, of course, going to be export, but under the government's supervision and under government's regulation.
Mr. Banka, how are sugar prices trending right now from the peak? How much have they fallen? And with the bumper sugar production that we are expecting, do you think there could be more pressure on sugar prices?
No, I don't think so. It's actually, I must say, it's rather intriguing that sugar prices have not gained as much as they should have gained, because season 21-22 we are closed with an inventory of 5.5 million tons, which doesn't even translate to about 3 months consumption. So which has been the lowest inventory in the last few years. So in spite of that, the sugar prices which should have taken off in the last 2-3 months haven't taken off. In fact, the corresponding period last year, we had better sugar prices. The dynamics, the numbers, the sugar balances and all are reasonable. We expect, of course, a bumper sugar production season ahead, but there's going to be export allowed. And so largely the expectation is that by the end of 22-23, again, we should end up with a similar inventory, which is a very reasonable and healthy inventory, which should not lead to any kind of fall in the sugar prices, but at the same time, there may not be runaway increase in the sugar prices. But ethanol is going to be the key sector because, most of us, we are going to be Our product mix is undergoing big change because more than our focus is going to be on ethanol. So we're cutting down on sugar production. We're going to be making more ethanol in the times to come.
How much are you going to divert towards ethanol?
From an ideal level, where we could produce about 45, 46 lakhs quintals of sugar every year. We had already reduced our dependence on sugar by making use of B-heavy molasses, but the larger sacrifice of sugar production is going to come in the season ahead, where we'll be making use of juice, sugarcane juice directly for making ethanol. So, which will we expect about 30% reduction in our sugar production.
Okay, so what would that mean for your margins overall, since more of it will go towards ethanol production? Expect an uptick in margins overall and just for the ethanol business?
Yes, because sugarcane juice is going to be used for making ethanol, and during the season and in the off-season, B-heavy molasses is going to be made use of. So definitely, we see improvement in our earnings in the times to come.
Okay, all right, Mr. Banka, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Dwarikesh Sugar. The stock is down around 3.3%. It's been a tough quarter for them, where there was a significant reduction in terms of the operating profit. They did say that there was some amount of one-offs, but realizations have come off this quarter as well. We need to take a short break. But on the other hand, we are going to be focusing on more stocks as well as Manisha Gupta, who's going